Do, 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 do. All right. What we got, man? I just got this crazy idea. Is to do Forex with stage analysis, guys. Stan covers in the book in the final chapters, having fun with futures, options, funds, but I can't quite remember about anything about Forex, guys. And that's one of the main reasons I went away a little bit from Stan. So from I think 2007 to 12, I was doing Stan, going great. I had volume on my stock charts. I was able to apply his framework. But after that, I started doing Forex, Baby Pips School. And then I with my interactive brokers, guys, I just didn't have the volume on the for the Forex charts. And I said, man, and that's when I had to find some other way to do another framework. And that's when I developed my chart trading framework based on monthly candles, which looks like this. Drawing trend lines, patterns, classical chart patterns, regular patterns. And that's how I trade away, guys. But now with TradingView, tradingview.com, look, volume. So I'm going to try to experiment, see from all I've learned from revisiting stage analysis. I'm going to try to fine tune the strategy of stage analysis, Stan Weinstein's, applied to Forex, guys. And the Forex, with the beauty of it, it's zero-sum game. It's more of a pure stages. There's no bias upwards like the stock market is, that over 30, 40 years, the euro has gone up and up and up. And, a trend could go up, and over 10, 20, 30 years, it could easily come back all the way down. It's not inflation adjusted or skewed upwards. You can see here 94, price action of 94. We're already 94, 2004, 10 years, 2014, 20 years, 25 years later, we're back there. It doesn't have to go upwards like a long-term investment. There's no such thing as long-term investment with forever, hold for 80 years. And with inflation, your stock, if it's still, if it's a blue chip, it's going to keep going up and up, like IBM or Microsoft or stuff like that. It's more pure, as in the stages. So we're going to check that out, see what type of observations I can deduct from seeing how that fits, guys. So I'm just going to start doing monthly candle, see what the prevailing trend is, and see where that brings us. Arrow, top to bottom. Boop. Add it to breakdown line. So what I see now, we have a monthly candle breakdown in progress right now. This is the August candle. And if we have a close below this important 116.41, then let me configure that. I want to see not the labels, the value, indicator value. No. Where is it? Background, indicator titles, indicator values. There it is. Why don't I have it here? Not here. Maybe here? So weird. Okay, I'll put that OHLC, open, high, low, close. So when I highlight the candle, the close 1646, open 1646. Here's my monthly defined breakdown line right here at my support. And my monthly defined resistance, 124.13, 124.13. They share it. Not always, but most of the time they do. See nice tweezer tops here, and down it goes. So that's a pattern, man. This would bring us all the way back down here, guys. All the way to 108, 108.79, back to previous, what I call a wall. Previous resistance turns support right here. Bottom formation, breakout, reaches target. And after that, that's all she wrote, guys. I like these targets that don't have any support, visible support on the way down. 12-month moving average skewing down, horizontal breakdown line. This is a clear cut. Look, you gotta remember. Every time I see a wick, it's a reminder for me that wait for the monthly close. This could easily come back in and close as these two candles did, back above the breakdown line easily. So early in the month, no matter how deep it went. See these wicks, these candles, they even were deeper below the line, only to come back up. Got to really always observe when you draw your support lines, break lines, using the closes and opens. Look at all the wicks and use that as reminders. That's emotional management technique. That this could be you getting trapped. Some people got trapped here. Some people got trapped here. Some people got trapped here. I know things are looking better. 12-month moving average going downwards. But just wait. Just make sure the market's giving you that confirmation that level has actually broken down. But it looks to start going down, guys, out of a stage 3 into a stage 4 on the monthly. Let's zoom in. See how we could apply stand with the volume on the weekly. See the noise? These closes below the monthly defined breakdown line. Don't get trapped. All right, Ichimoku cloud. Okay, 30-week moving average. Angling downwards, it's red. That means the price action is below 30-week moving average. The 30 MA is angling downwards, and we're underperforming the SPX. I'm going to maybe have to refine this. Right now, I'm comparing to the SPX. Maybe I should become comparing it to the euro, the futures of the euro, or the basket of euros against all the other currencies, and see how it's underperforming versus the US dollar. Compare it with its peers. But on the pure performance, let's say that you would just be playing the SPX. Well, this is really underperforming it. So this is awesome for a short as a baseline. We'll refine, because there's no such thing as sectors, industries. So I might have to develop some different type of techniques to do the force to trade approach, like comparing it to its peers. I'll try to figure out a way. But right now, we'll just do it baseline. Am I underperforming the SPX? Yes. Is the relative strength going down? Yes, I could short. There's one last thing here before we say, hey, let's short it. Looks great, Pat. Last line of support right here. Ichimoku cloud defined. And that is what we want to wait for. That's what's going to happen during the month. Is it going to hold down here 1 week, 2 weeks, 3 weeks, and then break down? That's what we're going to wait. So really have to wait for that cloud to evaporate, dissipate, and make sure we have a close below it. But it's really looking like a top, guys. And this is a nice, I love this when there's a formation, a breakdown formation, lots of multiple retests of a breakdown line of previous low, and then you break down. I trust that a lot more than just a single thrust that goes all the way down. That goes through. I'm always wary of the sharp pull back up. But this is really, if it goes down, the market's decided it's time to go. And hopefully the 30-week MA could come down a little bit down by the time we break down. So it won't be that far off. Our sell stop would be above that launching pattern. We'd short wherever it is here. Investors' way could have their sell stop here. And then that's all she wrote, guys. As it zigzags down, move our sell stops above those pullbacks for the trader's way, and if you're in the investors, above the 30-week moving average. until the price action starts going sideways. 30-week starts going sideways. Then you go out. Then your exit here. Trendline violation. Exit half your position. And that's how you ride a stage 4 decline, guys. See, you have the crescendo volume, guys. You still have that. So that's it's pretty cool. You're having the volume on these candles as it's starting to get out of overperforming to underperforming. On all these down candles, crescendo volume, not good. Negative sign, as Stan says. And let's see if the volume picks up here. For the next 1, 2, there's going to be at least three more weeks before the month's close. Let's see if the volume picks up this way. Maybe there'll be a pullback back to this this resistance line of this sideways move. Expect that, and it'll help you not get surprised and just. So that means if it does pull back, might have a little bounce back in the Mansfield Orchard strength, and then for you to short on the way back down, which is awesome. Man, I think there's some possibilities here to apply Stan Weinstein stage analysis to Forex, especially if I have the volume. I think it's going to be a question of observing, going through different pairs, also the major pairs, any pair, observing the volume behavior when it goes down, if there's continuation, follow through in the stages. Is there breakout volume? See, maybe not twice the average volume. We might have to tone that down. Maybe there's so much volume in Forex trading all the time that what we might actually have to look for is 1.5 or something of the sorts. Bottom formation. Gap up, man. Gap up on the weekly. And right here, see that volume? Not twice the average of the previous 4 or 5 weeks, but a definite increase on that candle here, that breakout candle. We'll have to see how it works, guys. See if we're able to get. See, it's going up, but we're still way under the SPX. So I'm wondering if that's the good measure. Because SPX is for stocks, it's a baseline. I think we could do better. Find the equivalent of SPX for Forex, guys. Maybe the DXY index, just the US dollar. Can we do that? Looks better, right? More representative of stage 2. In green, stage 2. Red, stage 4. Yeah, that might be better. Might have to compare with the dollar index. That'd be our baseline. All currencies based against the dollar. Or maybe when we change pairs, we'll have to change the index we're comparing it to. So that'll be refined over the next few episodes. And it looks good, guys. Stage 4 on the way. Already on the way. Let's just wait until the last line of support for the euro and timber. Ciao, guys.